Hello and welcome to this session in which we would look at the statement of activities for private not-for-profit organization. What we have on the screen right now is the statement of financial position, aka same thing as the balance sheet, and we looked at this balance sheet in the prior session. So why are we starting to look at the balance sheet if the purpose of this lesson is to look at the statement of activities? Because I want to draw your attention to two accounts, to two net asset accounts we discussed in the prior session, which is net asset without donor restrictions and net asset with donor restriction. Now, why am I emphasizing this point? Because the statement of activities that we are going to be discussing today, it's going to be the statement of activities which is similar to an income statement and a statement of retained earning. The point I'm trying to make is this. The statement that we would look at today, it's called statement of activities, which is, as I mentioned, if you want to translate this to the business word, it's the same thing as the income statement. But the statement of activities, it's going to include the section that's very similar to retained earnings. And this is what I wanted to start with, to kind of give you the big picture. Let's go ahead and take a look at a statement of activities, but this is the overall picture. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So this is the statement of activities, which is no surprises. It starts with revenues. We have a column without donor restriction, column with donor restriction, and this is the current total for 2004, and this is the prior year. It's a comparative statement of activities. This company is a global wellness initiative. Statement of activities year ended December 31st, X4. Now, I am not going to look at revenues specifically nor expenses specifically because we're going to have a separate session for those. But the point I am trying to make is this. On the statement of activities, you have your revenues. You have all sorts of revenues, contribution, grants, fees from exchange transaction, all sorts of revenues, investment income, miscellaneous revenues, which we will discuss in a separate recording. And we're going to have one without and one with donor restriction. Then on the statement of activities, we're going to have expenses. Here expenses, they can be program expenses, they can be supporting expenses. Here we have research, information, advocacy, supporting expenses, managerial and general, fundraising. Then we have total supporting services, then total expenses. Then we're going to take the revenues minus the expenses. It's going to give us the change in net asset, which is in a sense net income. Net income, change in net asset, it's the difference between total expenses. We have total expenses without donor restriction, 240,851, and we have revenues 292,970. Revenues minus expenses equal to changes in net asset. Then what we will do is we will add to it the net asset at the beginning of the year, 65,780. We come up with the end of the year net asset without donor restriction, 117,899. So take this number here, 117,899. So this is a statement of activities. Simply put, if you want to think of the statement of activities equal to the income statement, then it stops at change in net asset. Then we'll take the change in net asset and we'll add to it the beginning of the year, which is this section here. Think of this section here where you are looking at retained earnings. Think of this as retained earning from a for-profit business perspective. So 117,899, let me go back here and show you. This is the number that's on the statement of financial position, 117,899. So this is what I wanted to show you, that the statement of activities is also, in a sense, adding, in quote, retained earnings. The same concept applies with donor restriction. With donor restriction, the net the change in net asset is negative 12,000, which is net income, a loss of 12,000 in quote. Then we add net asset at the beginning of the year, which was positive 63,984, will give us net asset at the end of the year 51,984. 51,984 reconciled to the balance sheet. Now, a few things I want to tell you about the income statement. Notice here we have revenues for both with and without donor restriction, and we have no expenses with donor restriction. Hopefully you noticed this. Maybe you did notice this, maybe not. If you look at with donor restriction, there are no expenses, zero expenses. We're going to explain why in a moment. And notice here we have a line called net asset released from restriction. We'll come back and cover this, but because I hope you saw this. And notice the same number here is moved from here to here, and you're going to see what happened to this number when it comes without donor restriction in a moment. So let's summarize what we did so far on the statement of activities. We have all the changes in net asset without donor restriction, net changes with asset with donor restriction, and total net asset for the reporting period. That's what you saw. These changes take the form of revenues, gains, expenses, and losses. So on the statement of activities, you have revenues, gains, expenses, and losses. In general, revenues and expenses should be reported at their gross amount. In other words, we don't net anything out. Exceptions include activities peripheral to the entities, such as investment revenue. Investment revenues are considered peripheral. They're not part of what the non-for-profit, the purpose for the not-for-profit. So you might be a non-profit organization that helps people that have mental challenges. That's fine. But you might also have as a non-profit an investment account that generate investment revenue. This is a peripheral activity that's not central to your business. Those investment revenues are reported net of the related expenses. So if there's any related expenses, we net them out. All expenses reported as a reduction of net asset without donor restriction. Once again, let me show you this. So all the expenses are reported under without donor restriction. Do you guys see here? There's no expenses on the other side. And I'm going to explain why in a moment. Just I want you to see this first. Expenses must be reported by their functional classification, either program or supporting. And I'm going to have a separate recording about expenses and a separate recording about revenues, because this is an overall picture. But all what you need to know for now is the format of the statement of activities. Expenses are reported by program. So the not-for-profit will serve a program, whether it's a cancer research, whether it's to help the a certain disadvantaged group, or whatever the program happens to be. Now also, that not-for-profit will have a supporting program supporting their activities. So they have expenses that are related to their program, whatever they do, and they have managerial and administrative cost, which is part of their fundraising effort, which is called supporting activities. And also expenses are broken down by their natural classification, such as salaries, rent, interest, supplies, either in the statement of activities, right, in the statement, in the notes of the financial statements, or as a separate financial statement. And again, we're going to look at the expenses in a separate recording, because we have to invest a little bit more time in explaining what functional expenses, what natural expenses are, and how they are broken down. But this is the overall picture. Gains and losses on investments and other assets are reported as changes in net asset without donor restriction, because those are without donor restriction unless their use is donor restricted. If that's the case, then they will be reported under the donor restricted. Let's go back and discuss this line that we said net asset released from restriction. And which line am I talking about here? I'm talking about this line here. Let me highlight it in yellow so you can see it. Net asset released from restriction. Okay, and I'm going to show you a full statement of activities on one page to illustrate this line, because it's easier to do so. So this reclassification of net asset with donor restriction. So first, someone donated something, and that something was restricted. So it was a revenue under donor restriction. Then one way or another, we met the restriction. Then this amount moved from donor restriction to the net asset without donor restriction in the year in which the donor stipulation conditions are met. So reclassification are made when this donation satisfy a program or purpose restriction. Simply put, somebody said, well, you could only use this money for public health. Well, we're ready to use it for public health. It goes from donor with restriction column to donor without restriction, revenues and expenses. And you're going to see what I mean in a moment. Or the reclassification satisfy of equipment acquisition restriction. So this money was restricted for the purchase of acquisition, and now we are buying the asset. Or satisfaction of time restriction. Simply put, the actual owner or implied restriction. So the owner says you have to hold this money for 3 years before you can use it. It's either actual donor request or implied, when something happened. Once I pass away, you can use it. I don't know, whatever the implied restriction is. But this is what things would look like from released from what? Released from restriction. So we might have, for example, under donor with restriction, if you notice here, we have 120,000, and that's revenue, but that's negative. So what happened with this revenue, this 120,000, it moved. So we debited. Think of it from a journal entry perspective. We debited revenue with restriction. We credited revenue without restriction, 120. So simply put, we moved $120 from this revenue to this revenue. So one revenue went down with donor restriction. Notice it's 380. We had contribution of 380 that year with donor restriction. Then we removed 180. Therefore, our total revenue for that period is 260. Now that 120 left the revenue with donor restriction, went to the revenue to without donor restriction because it satisfied a certain purpose. Now, immediately, once it satisfied this certain purpose, it's going to be expense. So notice here what happened. Under expenses, we have a public health education. So this 120,000 was for public health education. And what did we do? We spent this money on public health education. So notice what happened. We took the money from with donor restriction to without. So this is revenue here, then it's expenses here. So the net effect of all of this is 0. So basically, the net effect on the without the donor restriction is 0 because it was counted as revenue, then immediately expensed. If we go back to this example here, if you want to see this example here we released 66,000, went from donor with restriction to net asset released from restriction. Then we went down here and we spend this money on research, whatever research we are doing, and it's expensed. So this is what I want you to see when I said there are no expenses, because again, there is no expenses under with donor restriction, because once we only have revenues, and once those revenues meet the conditions, they go to without donor restriction, they get expensed with the donor restriction. So notice all the expenses are without donor restriction column. Let's take a look at this multiple choice question from farhatlectures.com. All the following statement about expenses reported by non-governmental profit are correct except one. So we have 3 true and 1 false. Simply put, this could be a true-false question. Like, I'll give you a statement, tell me whether it's true or not. The classification of functional expenses include program and support services. Yes. Our expenses for not-for-profit, it could either be a program service, servicing our program, or support to the not-for-profit. This is what the classification of expenses. That is true. Therefore, A is out because we're looking for the false, except for, be careful. Not-for-profit organizations are required to provide details about their expenses by functional classification and natural classification. Yes, they are supposed to do so by functional classification and natural classification. That statement is also true. Expenses may be reported as a decrease, so true is B is out. Expenses may be reported as decrease in net asset with or without donor restriction. Is this true? What we're saying, expenses can be reported as a decrease, which is a decrease in net asset. Expenses decrease in net asset with or without donor restriction. No, it doesn't. There's no expenses with donor restriction. With donor restriction, don't have expenses, because donor restriction means I gave you money, you cannot use it, you cannot expense it. There should be no expenses related to that money because I don't want you to use it. Once you are ready to use it, it goes with donor to without donor. Therefore, there are no expenses with donor restriction. I would say this is a false statement. Just double check, make sure D is true, which is false for our purposes, which is not the correct answer for the question above. Details regarding the functional classification are reported on the face of the statement of activities, yes, in the notes, or in a separate schedule. Yes, you can report them in any of these places. That's fine too. It's a correct statement. D is out as we expected. C is the correct answer. There are no expenses. There are no expenses reported under the column with donor restriction when it comes to the statement of activities. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you whether you are studying for your CPA exam, accounting courses, or any other professional certification. Invest in yourself. Good luck. Study hard and, of course, stay safe.